Good day, guys. Um, Welcome back to our YouTube channel, The Hustle Effects. Today is our extension um of the Quasimodo Reversal Pattern. So pretty much today we're gonna talk about the third entry. The third entry, which might be something like this. So this is the third entry. Remember, the last time we did talk about the two entries, possible entries that you can get on the setup. So now we completing the sequence with the third video just to show you, you know, possible entries on this pattern. So now we will talk about that. So remember, I did say you're gonna have your low, you're gonna have your lower high, you're gonna have your lower low, and you're gonna have your higher high. So your first two entries on this setup is this one to the upside, your stop loss at your lower low, your entry at your low, targeting the high. That's your first entry. That was your first entry. Then your second entry was here. Let me just put this to the side, yeah. The second entry was here from the higher high as your stop loss, then your lower high as your entry point, also targeting your low. Your entry point, your take profit, vice versa with the first entry. Now, we're gonna be looking at the third entry. The third entry, you don't find it most of the time because what might happen is that the chart might go down this side also, can continue with the momentum to go down. But this is how you can also enter the third entry. The third entry will be here. I'll show you now on the market. Same target, but you can keep moving your stop as the chart goes up. You can move your stop as the chart goes as up to maximize your profits. This is what the third entry is all about. So this one is a full reversal to that movement that came. The third entry is the full reversal to that movement that came from the upside down. So this one will go back up to most of these levels up here where the liquidity is sitting up here. So I'll show you all of this now. So remember, we had a low, we had a lower high, we had a lower low, we had a higher high. So these two entries are already done, as you can see. The first one done, the second one was done on Monday the 27th. So this one took about almost a week to complete. This one took a day to complete. So you must always remember this. When the chart goes up, it doesn't move it the same way as it goes down. It can go down as like the market is crashing to go to the downside. So to look at this, most of the people, what they do is they will call this entry here, the third entry. Let me just remove this and this. So what they will do is they will call the third entry, they will say they called it from the breaker block. You can aim for the same target or you can keep on moving your stop a stop loss, just to lock in profits as the chart goes up. So what can happen is they call this the breaker block here. They call this the breaker block. So this is where you are most likely to also take the third entry to the back to the upside. So remember the first entry was taken from here, from this point to this point. The second entry was taken from this point to this point, which is the lower high to the low. Then the first was with the low to the high. So now this one is still gonna be more like the first one, but now you can either aim, you can either aim for this or continue as hold as the chart goes, continue to go up to the upside. So those are the kind of things you might be looking to target, the entries that you might be looking to target on this setup. So as you can see, this is the live chart of NASDAQ. This is the live chart of NASDAQ. The target is still the same. If you choose to go with the third entry, which in this instance will be this entry here. The stop loss is the same as the previous one because now we're gonna treat this low as the breaker block. You're gonna treat this previous low as the breaker block, this one here, because the market made a low, it came down, break of structure to the downside to collect liquidity. It went up, did the same thing with the liquidity on the upside. Now the chart is going up. You see, it's going up. There's a lot of factors that people use to identify this setup here. So in most cases, you end up having people even stretching their Fibonacci, you know. You end up having people stretching their Fibonacci. Sorry. You end up having people stretching their Fibonacci looking for the golden zone also. Looking for the golden zone to the upside, as you can see. So some of them would have took the entry between that 79 and the 70. That's the golden zone. So the OTE, optimum trading entry, we will talk about that in more videos to come, which is the ICT concept. So but nonetheless, I don't want to complicate it. I want to keep it as simple as possible because, these terminologies and everything, they tend to confuse people. So I try to keep it as clean as possible. So like I said, you have your low, you have your lower high, you have a lower low, you have your higher high. Then the Quasimodo two entries setup was done. Now you look at the possible third entry. You see how hard the chart did reject on this level here. It rejected, triggering your entry now, going up, which was it hit your take profit for the second entry, also triggering your third entry. If remember, I did speak about having to use your pending orders, which would work wonders for you. You understand? You already set up your stop loss on your pending entry. You set up your entry point. You also set up your target profit. You can target this same amount of pips, or you can even target higher, this higher high, or continue to lock in profits as the chart goes up to maximize your profits as the chart keeps going up. So this is the live market of Nasdaq as you look at it. So those are the kind of things that you should be, looking for. There's like I did mention that there is quite a few factors that you can look into. So now let's delete some of these things, some of this, because some of the people they prefer, let me just put it here. Most people they prefer the third entry. Those trading ICT concepts, they prefer the third entry, which is this entry here. So as you can see, it's the same. You have your low, you have a lower high, you have a lower low, you have your higher high, and this entry, they maximize, they go for this entry, most people who trade ICT concept. But for me, I prefer um, price action, technical analysis and price action. That's where I was able to find and identify these two entries right before this third one. So you have these two entries which will give will uh, uh, you'll make profit from, which would then be also uh, uh, enable you to take the third one. So that's a good way to trade, I think. Remember, this was a week movement. Then this was a day's movement, and this one is already 2 days in, so it's already going back up. And as you can see, we did have a gap here. We had a gap. The market opened on Monday with a gap, so it's trying to go up to close the gap. So you can either, for you to be safe, you can either target the same amount of pips that you made on the first and the second entry. So you can target the same thing on the third entry, going up. So that's the same ordeal, in most cases. So you don't want to complicate your tradings. You don't want to have too many lines going on. You want to keep the same setup. Once you get that kind of setup, on your chart, you can identify this kind of setup in your chart. That's a good month of trading. You understand? You don't have to look for smaller, time frames, or you don't want to, not even smaller time frame. You don't want to look, you don't want to over trade. You don't want to do too many things to your chart. You don't want to see this, see that, see this. No, you're just seeing one setup. So as you can see, ever since the 13th of January, I saw this movement. So it the first entry was done by the 22nd, then the second entry was done by the 27th. So it goes to show you now this third entry will be done also, as the market, as you can see, the market's going back up. So people were saying, no, the market will go down, it's crashing. No, this movement was due to happen based on this reversal pattern, because whatever goes up must come down. That's the classic way of saying, that as the chart goes up, it should also come down. It should come to correct the price. It made a lot of liquidity going up, and then it will come back to close that liquidity and then go back up. Correct everything to the downside. Those buyers who were there who didn't close their entry, it came down rushing in one day to take all of them out, their stop losses and everything out, and then go back up. But you don't have to worry about any of those things ever happening to you, because now you can already, based on your low and your lower high, you can set your take profits and the entry points and your stop losses. And as you can see, you in these three entries, you would be, having a success rate of 100%. I'm not saying this strategy is 100%. I'm saying you would have a success rate of 100% in terms of, your entries and your targets also, setting up your targets and the entry points by looking at the setup. So you don't have to complicate it. Like I said, you have your low, you have your lower high, you have a lower low, you have your higher high. Then you have here your breaker block, which is the third entry, coming back to the breaker block. So in most cases, you'll find, an inverse order block here, which you can take going up based on ICT concepts, trading concepts. Let's see if there was any this side. Yes, as you can see, here we didn't really have an order block, but hopefully maybe, but I wouldn't want to confuse you most of the time. But maybe if you go to a daily chart, you might have an order block happening here. So it came back to retest that level, but it also broke down, but it went back up. This candlestick here. Yes, you can see I think this is the rising star, if I'm not mistaken. We've been in this game for quite too long. You had to learn. If you started trading back then, you had to learn these candlesticks patterns and so forth. You understand? But nonetheless, you keep it simple. Try to keep your chart as simple as possible. You don't want to overdo it. You don't want to overtrade it. Trade, like I said, I always say this, trade setups only, trade setups that only make sense, to you, and you have confirmation based on the previous data that you have on your chart. Trade what you see. You understand? Don't try to force something into the market, and say, no, it's going to do this. It's not going to do that. We anticipate that the market will do this based on the patterns, based on the data that was shown, which is this data. This is the previous, movements of the chart. We anticipate what's going to happen. We don't say the chart will do this thing. No, we anticipate what's going to happen based on what we know and what we've learned over time. So don't ever for a day say, no, I know this thing's gonna do this. Even if it can go your way, it's still fine. But don't say you know this is gonna do this, because the charts have a different language. They are not being controlled by us. You're just there to minimize your losses and maximize your profits. You understand? So that's what you always try to do. In the charts. We don't wanna, over trade. You don't wanna, overdo it. So one of the other things I've been receiving from most people is this thing, a risk, 1% risk. You will never make money with 1% risk. I'll tell you that today. You will never make money with 1% risk. Remember, you have your life to live. You have responsibilities, that are tied up to you that you need to do, like your rent, your utilities, buying clothes, going out. Those are the kind of things. And you also want that lifestyle you see on Instagram or whatsoever. But the the secret to everything is always consistency. But 1% risk, I wouldn't really advise it on a 1% risk. At least do 50%. 50% risk. You understand? That's how you make the big money. That's how you see somebody making maybe 100,000 out of 10,000. That's risk. You put the risk in. You understand? Believe on your setup as much as you would wanna believe your dream, the dream that you wanna live. Believe on your setup, then you will see wonders. You understand? You can turn a 1,000 rands or $1,000 into 10,000 on a single trade. And remember, we have this saying in trading: one trade, it is all it takes. It only takes one trade for everything to change for you. You understand? So I always say trade setups that only matter. Trade setups that only matter to you. Don't overdo it. Don't force things into the market that are not there. You understand? Don't try to complicate things. Try to also stick to one thing that you can always identify. That is always easy for you to identify on the market, whether on a small time frame or on a bigger time frame. For me, I use H4, starting from H4, H1, M30, M15. You understand? So whatever happens on the smaller time frames, it cannot really affect the bigger time frames, because the real movement is on the bigger time frame. Because imagine if I had to go to a smaller time frame, I wouldn't have seen all of this happening. You understand? I wouldn't have seen all of this movement. So the bigger time frames, they show you the whole movement, where the chart is really going and what's really happening. Understand? So you can either use H4 or your 1 hour. That's where you're most likely to get a trend and the movement. But if you're looking to scalp 15 minutes, 30 minutes to an hour, you can go back to your small time frame. You will always find this pattern. You will definitely find this pattern. You understand? So don't try to overdo it. Like I said, don't try to overdo it. Don't try to be smart about it and say, no, this and this and this. No. These people who the market makers, they're very smart. They can trick, they are tricksters of the market. We've known them to manipulate price. Even the brokers, they can manipulate the price, the spreads, and everything. So always try to make sure that you protect your capital. That's the main thing to do, when trading this when overall trading, when it comes to trading overall, protect your capital. You understand? Yeah, that's what I would always advise to you. And then minimize your losses, maximize your profits. So with that being said, this is what's happening. This is what I was showing you guys today. The third entry, which will be here, going up to the upside. The third entry going to the upside. You can aim for here, the same target, or you can keep on, holding and protecting your profits or locking in your profits, as time goes. For now, if let's say now you would have took this entry, you would have probably moved your stop loss to this range here, where this range started to happen somewhere down here. You would have moved your profits, locking profits here. So you are already, you know, saving some of the profits in case the chart comes back down. So you already locked in some of the profits, but already the chart you will be in profits of up to here, but you already secured most of the profit by locking your moving your stop loss to sorry about that, moving your stop loss to that point. You see? So now, yeah, don't think about it, don't overthink it too much, don't make plans for money that's on the broker. Don't ever do that. Remain calm, do your thing, and don't focus on the noise. Social media is there, Instagram is there, but use that as motivation to get there. Don't use that as something that will bring about you to have say now, I will do this, I will do this, cars, women, those kind of things. It never works out, bro. It never works out. Most of those guys, they living from people's signals, they living from courses and so forth. You understand? So you wouldn't want to put yourself in those guys' shoes, and you would really, if you were to meet some of your mentors in real life and really know how they live, you would be very disappointed. So focus on your craft, my G. Focus on your craft, and learn slowly. Don't rush, don't try to rush the process. As slowly as it can get to you, as slowly as you can process it. If you can follow my channel, subscribe, push on the notifications, you will get to see the knowledge I've learned for the past 6 years that I've been trading. So I'll always put it here on the channel, you understand? But I have 7 years in trading, but I don't count the other one because that was just the 1 year of taking losses, learning, also being scammed. So that is part of the journey. Don't overthink it. You will make that money back. So like I said, try to go on your own pace. Don't compete with these guys. Don't ever compete with these guys. So do your thing. And then with that being said, thank you for watching this video. Thank you for watching this video, and I hope you like the content that I'm posting. If you can hit that button and then subscribe to our YouTube channel. Until I see you next time. Thank you.